Capital flows are very varied in Scotland at the moment. We've seen the Far East, the Middle East. The Germans have been coming to Scotland for a long time and like Scotland very much. That is going to continue. We are very strong in our global wealth platform, which allows us to form to find different sources of capital. Traditionally, it would be large corporations or institutions who would be coming to invest. Our residential business and our global wealth team allow us to find capital from individuals and family offices, which I think is going to increase. The outlook, I think, is positive. You know, the retail sector, like every other retail location, has its challenges at the moment. We're seeing names disappear off the high street and off of retail parks quite frequently, but I think the quality will survive, and it will be down to the asset managers and the landlords to sort those problems out, fill the units, whether that's through capital expenditure, rent rebasing, and the cream will rise to the top on that front. The industrial market is incredibly hot up and down the country at the moment. Scotland has some fantastic industrial locations, and we're seeing great demand for them. I guess stock is always the big problem in both office and industrial. We need to see some development in the office markets in both Glasgow and Edinburgh. It's difficult to see how we will be able to buy or find assets for these large investors purely from up and built stock at the moment. Stock's changed hands reasonably recently, so to then give someone a profit is going to be difficult. I think development is the key there. There are fantastic sites in both cities at the moment. Glasgow is an example. There's probably 4 development sites with good developers behind them, as a financial institution, doing a bit of forward thinking to, do I want to own this end product? If the answer is yes, then I think backing a developer now, while you can actually cherry pick the site and the developer, is probably the way to go.